Rogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hey, folks, how you doing today? Listen, I know that's a little bit loud, wasn't it? Hey, Brian and I are here today. We're going to talk a little bit about the world of algorithmia.
Is that a world? Is that a world?
Well, it's just as real as the term I made up about it.
Oh, okay. That's definitely real then. Yeah,
So
we're going to talk a little bit about that.
Yeah, a lot of people understand that just because computers trade things doesn't mean that humans aren't involved. And so when you start looking at algorithms, it's it's not just interesting, but it's important to understand how the numbers are derived. So we're going to go through that a little bit today. Brian, what is else we have on our minds today?
Well, so listen, feel free to ask questions. The comments we should be able to see. So drop comments and questions. We're going to target going through 20 minutes. So it's going to be a relatively quick session. But we'd be remiss if we did not talk a little bit about the markets. And in the markets, natural gas, after reaching new recent highs to 227.4, we've dropped back to 217. So today's been a pretty big move. Crude oil has kind of found a bottom after falling back from $83 to $78, $79 level. And what the reason and rationales, we're not going to step through all this because this is a presentation that we're actually going to do for our members. And we'll talk about that in a little bit. But crude oil, we're bouncing back after a significant weekly decline. And we just had stocks come out today. Crude reduced the inventories by 1.4 million barrels, and gasoline increased by 0.9 million barrels. There is... Oh, go ahead.
You know, that brings up an interesting thought. I was reading this article that talked about, and this will be real quick, how while OPEC is reducing crude oil output, they're actually increasing refined products. So that maybe we're not getting the deduct that we're thinking on the crude oil because they're making it up in products and sending it out to products. Just a thought process, by the way.
Yep. Yeah, no, that is interesting. Now, both Morgan Stanley and JP Morgan are modeling a kind of tighter conditions going forward, but all eyes are going to be on OPEC Plus's meeting on June 1st. So this month is going to be pretty active when it comes to that. And we initially, at the beginning of the week, the ceasefire talks have been off and on. And now it looks like the ceasefire is having some more discussions. Asian markets are reacting to some of the global economic news. Like I said, we're not going to go in deep on this, but if you want to go in deep on this, you can join our service. We'll tell you a little bit about that a little bit later. And we have geopolitical tensions, and I think we've estimated the geopolitical figure risk premium being about $5. Is that what we calculated this morning?
That's what we were calculating this morning, being about $5. And what that means is that when tensions go up, based on the level we just saw, it's about $5.
Right.
Remember, this is not a war that spreads. It's a very isolated war. This includes, by the way, not just Israel and Gaza, but also the Ukraine.
Yep.
So you got sort of a two-tiered price there. And so right now that's about $5. If any one of those broke out and expanded some, that premium would go higher, I think.
Right. So on the summary, crude oil is kind of recovering or stabilizing. Asian markets are showing some strength and geopolitical impact. The tensions are very much weighing on the crude oil markets. So on natural gas, I thought this was kind of interesting. Natural gas European prices have risen because of competition from Asia. So right now we have some interesting dynamics happening on the LNG markets. And like I said, we're not going to go in deep here. We're just going to hit the highlights. European natural gas reaches a 2-week high. And natural gas prices remain at a 3-month high. So we did have last week a significant price surge, and some of the market dynamics, production in some operators such as EQT and Chesapeake, as well as others, is either slowing completions, depleting completions, or deferring them all together and dropping rigs. This is going to have a production response, and I would argue it already is having a production response. But we are currently sitting at 99 to 100 BCF a day. That is down from 105.8 in December. That's a pretty steep curtailment. So I think that's really gonna spell things out for an interesting summer. So
Well, the thing is that decline is always there. So it doesn't go away. And so, and the response is immediate. The reporting is what's delayed.
right. So near term, we are looking at after reaching a intraday high at 227.4, we've dropped it down to this 217.3. And for those that are interested, we do have in our Rogue Premium service, we do have a Rogue Edge at $89 a month and Rogue Premium at $179 a month. Rogue Edge gives you the basic building blocks of having access to supply, demand, imports, exports, storage stocks on natural gas, crude oil, refined products, electricity, and so much more. Plus, you get a daily email, a weekly video recap, a weekly PDF that sets the table, daily support and resistance for those that like to trade the markets, and insight into potential future market moves. And for those that really want to step up their game, you can join Rogue Premium, where we talk in our Discord channel and have meetings with our members frequently. And for example, this morning when we were trading $2.21, we indicated that 216.2 is a level to watch. And what has happened is we've collapsed to 217.3. So not going to say that we're right. We're not a price call service, but we do talk about that. And that's really what you get in the premium is it's not just our insight, but it's insight from hedge funds, from individual traders, from producers, consumers, midstreamers. There's so many different people that are in our Discord channel that you would have insight into that. Did I miss anything?
That gives you real good, not just insight, but exposure to all sides of the market. And that is what we try to do. We try to make sure that we don't have one viewpoint from one perspective.
Yep. So enough of the commercial. Let's get on to after the introduction to, or after the markets, after the market view, let's take a look at algorithmic trading. A lot of people, especially with the rise of artificial intelligence and algorithmic trading, have looked at this as a potential solution or destination. And this is not investment advice. Do not take anything that we're saying. This is educational purposes only, and we are not financial advisors. You can read all the disclaimers below. So, but we wanted to give an introduction into algorithmic trading because this is something that I tinker with, I utilize, I use. So there are different aspects or levels that you can look at when it comes to algorithmic trading. But Bill, what does algorithmic trading mean to you?
So algorithmic trading, to me, is very dependent on how much data you have. It is basically the mathematical results of what has happened in the past looked at as a probability of continuing to happen in the future. So that's basically what you're talking about here. You're talking about the algorithms are probabilities, not certain outcomes. So you should always look. This is why you always hear the disclaimer, past performances did not predict the future. But what they're doing is they're looking at when this happened 100 times or 1,000 times or 10,000 times, this is what was going to happen next. And so it is the more data you have, the more accurate it is. The less data you have, the less accurate it is, because you have to have a lot of data points in order for this to, in my opinion, for this to have to gain credibility.
So, put in a different light, there are two factors, in my opinion, that drive markets. One are fundamentals, regardless whether you're talking stocks, equities, futures, whatever. Fundamentals, supply, demand, it could be earnings. If you're talking about stocks, and then those are tangible. Those are things that you can quantify in the market. Has supply and demand change that add support to particular levels or weakness. Then you have what's called technicals, and technicals is a series a theory of markets that utilizing past pricing will predict where the future may go. Now, there are literally hundreds, if not thousands, of indications utilizing math, utilizing different techniques, and these have a lot of different names. We're going to touch on a few of them, just a handful, but really wanted to say we're only going to talk about a handful because it gets overly complicated, because there are literally millions of combinations of technical indicators that you can layer on top of one another. And the main thing is it utilizes the past to project into the future. So now, what are the benefits of algorithmic trading? You get speed, you get efficiency, you reduce your emotion, because emotion is extracted because this is mathematical, and it's scalable. So this can be applied on a massive scale. We're actually going to show you something towards the end that back tested of literally 10,000 plus combinations for one trading the algorithmic system. And we looked at it in the past, and you have to interpret, does that mean it's going to happen in the future? I don't know. Again, we are not financial advisors. This is educational purposes only. But what are the risks of algorithmic trading? Well, you could have algorithmic errors. If data gets corrupted, then you're going to have bad signals.
Also, if your algorithm is too complex, you have more chances of something breaking.
Yes. When I first studied algorithmic trading, technical analysis back in the 1990s, one thing that stood true is they said if you add more than 2 or 3 technical indicators, you're now going to have so many conflicts that you're never going to make a choice. So, so it was reduce what you look at and determine how you're going to approach it, because otherwise you're just going to confuse yourself. Again, this is just my personal opinion. Market manipulation. If you've noticed, there are spikes of volume that come out during events and during times, and those are computers that are executing transactions very quickly. And because they can move faster than everybody with a mouse. If you tried to work a mouse very quickly, it doesn't work very quick. So manipulation is probably a strong word and probably not the right word to use, but it happens quick. And as a result of this, there's systemic risk and a lack of transparency. So those are some of the.
Brian, we should call that execution risk.
Yep, execution risk.
Because the computer can execute faster than you can.
Right.
So it is And you're not executing against a computer, you're executing against 500 computers.
Yep.
Who are all trading different algorithmically. And so it gets to be one of those is that this is why when I was doing hedging, I went started placing orders just because the computer would hit the order. I wouldn't have to worry about hitting the order.
Right. Right. So we're going to take a look at a very basic technical algorithmic system. And this is a moving average crossover. For those that have traded before, this is a very basic level system, but we wanted to take a look at it and look at the back tested results on energy commodities. And that's why we called this energy algo trading. Is it worth it? And the question is, should you pursue this as an angle when you're evaluating, if you're in the industry, if you're evaluating the strength or weakness in the markets, whether you adjust your hedges, or if you're an individual trader, should you trade more? And a simple moving average crossover system has a short-term moving average, or an average of a certain number of periods. Say it's a daily chart and you have 5 periods. So it averages those prices into one number, and then it moves based upon the trailing 5 periods. And so that moving average is rising or falling. Then you have a longer term, and I'll just say 10. These aren't recommendations. These are just variables to utilize when you're looking at this. Long term may be 10 periods. So it's an average of 10. So you have a short term, which is a faster moving one, and a long term, which is a slower moving average. And you can pick different variables. I just mentioned 5, 10. You could literally pick 1 and 100, or 10 and 20, or 5, 15, or whatever combination you think might make sense for you. And a buy signal in this type of system is created when the short term crosses above the long term. So the 5 period comes from below the 10 period and rises above. And for example, here is a chart of June futures for crude oil. And again, none of this is recommendation to buy or sell. We are just merely discussing one of the millions of combinations of systems,
Right.
algorithmic systems out there. And what this has is a short-term moving average of 13 periods and a long-term moving average of 21 periods. And the short-term 13 is the pink line, and the long-term is the blue line. So the way you would interpret this is if we have crossed above, make sure I got the right one here, and if we crossed right there, okay, if we crossed above, this would be, according to the system, a buy signal. So at that point in time, let's put the price back on the chart. So it would have generated a buy signal down here, and then it would have initiated a sell signal here. You would sell your long here, according to the simple moving average crossover trading system. So this is one algorithmic system. This is a very basic entry level. This is usually where most people start the algorithmic trading result. And you can see another period of a buy was here, and they sold here. So that probably would have been a little bit more of a still positive, but kind of neutral. And then you would have a sell signal here and a buy signal here. So you can start to see over time whether or not a system like this makes sense to you. So this is one simple moving average crossover system.
And so these systems you don't necessarily have to use them for trading, but they're really good for giving you indications of what's going on in the market and what possibly could go on in the market based on your own decisions. And it might help you with either hedging or any kind of real physical production.
Yep. And
But you don't
so
see it used that often because these worlds don't collide very often.
yeah. And you may ask, well, why did I choose in this system 13 periods for the fast and 21 for the long period? Well, it's because we performed on natural gas, heating oil, and crude oil. If you're interested in these, drop us a comment, send us an email at rogue@energyrogue.com, and we'd love to see you. If you join us, we will do a session with you and kind of outline this and see if it's something that you would like to utilize for yourself. So this is a heat map of different combinations using a fast window and a slow window. And the fast window, for example, above this diagonal line, the fast is less than the slow, and then the downside, we should really ignore this bottom section. It's this section up here that we should look at. The lighter it is, the more profitable that combination is. For example, this says a fast window of 36 and a slow window of 96 historically for the period measured was a 380% total return on your money. So if you just threw your money into a system like this, you would have made 380%. The real
Now,
question is over what period of time?
right.
That's another element. But what were you going to say, Bill?
So this one's back tested how many years?
This was only back tested 4 years because we didn't want to
Okay.
or no, maybe 6 years.
So I mean, so think about you trying to go through 6 years worth of data. That would be horrible, wouldn't it?
Well, the old way
By
is
hand,
you would look at a chart and you would say, well, on this day it was $68.60, and then on this day it was 76.07. So I'm going to make this
That's a
much.
lot of Excel spreadsheet.
This is where the power of computing, the power of algorithmic, quantitative fields come into play. And
then put it
I'm going to
into a color
express my
map.
I'm going to express my opinion. Part of the reason that we designed Rogue Edge is we don't believe it's purely fundamentals as a market indicator. We don't believe it's purely technicals. We believe it's both. And that's part of the reason that we designed it, our system and our service that way, is so that you could take a look at particular things, such as we evaluate simple moving averages on a 9, 20, and 50-day period. And you can see this on our charts, and you can determine whether or not you want to take a look at a 50-day or a 20-day. And you can determine those periods based upon our charts. And we have bullish or bearish indicators based upon different techniques. But if you only look at technicals, you're missing a big part of the equation, which is what does the supply look like on a weekly basis? What does the demand look like? So when you're back testing all of these individual components, and what did I do? 13 and 21 was a 615% return over 6 years. So the thing is that
some of those hot spots could be fundamentals coming into play into the market.
Absolutely. So, absolutely. So the main goal of this is to really take a look at what your algorithmic approach would be. This is just one system. If you want to see this system, join our service. We'll do a session with you, and it'll be dedicated around how to put this into action, because you can programmatically approach the market with this. But let's keep moving. Technical trading indicators. There's momentum indicators, which are measuring kind of the momentum of the rise or the fall. Volatility, how volatile we've been. What the trend indicators, moving averages, moving average convergence, divergence, and volume indicators. There's things like on balance volume. But if you look at either trading view or bar chart, you will come up with literally hundreds. I'm going to scroll through these. Look at all these. That's how many indications or indicators that you could have. Now you throw
Right.
in all the different indications or strategies that you could have. Like bar chart has something similar where you can scroll through all of these. Most of these are similar system by system, but you do have some nuance there. But momentum indicators, volatility, trend, and volume, if you try and add these together, you may end up confusing yourself. But a volatility indicator such as Bollinger Bands measures the distance between the top and the bottom. And let's see, I had that right here. So you can see this in this envelope. So when you're towards the top of the envelope, it may be overextended to one side or the other. Then you have relative strength index, which it measures if it's overbought or oversold. And again, these are mathematical technical indicators. But the main conclusion, there's literally hundreds of these. What are the benefits of algorithmic trading? Speed and efficiency, reduced emotion, and scalability. What are the risks? Algorithmic errors, market manipulation, which is really the machines moving the market in a short period of time, and systemic risk, such as if you leave the computers on and it just runs, is it going to be disconnected from fundamentals? And that is a big reason that why we established Energy Rogue and Rogue Edge and Rogue Premium is to really solve for the why. In other words, the market moved up. Why? Well, sometimes it's fundamental, sometimes it's technical, sometimes it's a combination of the two. So
it's always going to be a combination of the two. It's always just dependent on which one's influencing the other. And
right.
That's what we're always looking at, which one's influencing the other. And so that's why we do this is to help people understand the market. It's a lot of times the market can get over, and I hate using the term the market, but the whole industry can get oversimplified because no one wants to take the time to do the work. But the work is doing this. And then
there's literally hundreds of factors that factor into crude oil price and natural gas price. And that's
what we try to do
is
pick out the one that's most influential at the time.
Yep. Because if you look at one, you're missing probably 6 other sides of the cube. So, or wait,
and then never forget
cube?
that Bill Shanahan has a burnt toast theory, and sometime you need to stop to ask me what the burnt toast theory is.
There's a lot of burnt toast, cold coffee, burnt toast. And what's the other one? Let's see. There's
traffic.
The cold cup.
It's always traffic.
Burnt toast.
It's always traffic.
Yeah, and traffic. So listen, we're gonna keep this open for a couple more minutes for questions. So if you do have questions, let us know. If you don't, we're probably gonna wind it up. But the main conclusion or the main thing that we want to leave is there are literally hundreds of indicators that you could utilize, and we just picked one system because we wanted to make it very clear so that you could see, okay, well, this is something that I could measure. And many people use a moving average crossover, and you can have different trailing stops. You can have different things. Every time you tweak the system a little bit more, then you might change the results. And when you change those results, it can be very impactful. And what you have to do is quantitatively look at whatever system that you're looking at and evaluate whether it's right for you, whether the risk tolerance is right for you, because intra-trade risk is something you should look at. And again, we're not financial advisors. This is educational purposes only. But these are just my opinions based upon my experience on the commodity trading side, because I've traded commodities for over 2.5 decades. So, any closing thoughts, Bill?
I think it's important to realize is that, first of all, a lot of people get paranoid with these because they think it's somebody's out to get them, and they're not. People are just out to make money. That's what they're out to do.
Right.
Except for in my case, there are people who are out to get me. And then the other thing is that just remember the market can remain illogical. What that means is by your logic, it can remain illogical longer than you can remain liquid.
Yep.
So it's important that you don't buy into anything all the way until you have tested. And it is a very good and strong tool, but it is just a tool. It is not. It's not a magic 8-ball. It is not a crystal ball. It's not a genie. So
No, it definitely isn't. And when you look at things like this morning, I was looking at technicals, and really what I was keying in on are these candles. I was not looking at mathematical levels, but I was identifying that these candles could show weakness. And so another part of technical analysis that it might be worthwhile in looking at is candlesticks. So listen, we'd love to see inside. If you are interested in everything on the energy side of the commodity, come join us, whether it's natural gas, crude oil, refined products, electricity. Come join us. $89 a month. If you ever find yourself looking for what's the supply, what's the demand, come join us, because you're going to spend over an hour looking for a lot of information across the web. We've centralized this and provided so much more in terms of nuance and context, and that's through our videos, through our weekly PDFs, and for our Rogue Premium, our Discord channel, our in-week video updates, and Q&A sessions with Bill and Brian. So listen, thank you so much. Thanks for tuning in. If you like this type of content, if you want to see more, let us know. If you have an idea of, I'd like to understand this about the energy markets, drop us a comment. We try and get back to all those comments, and we greatly appreciate you listening and supporting us. If you learned anything or found any of this valuable, if you could give us a like, comment, share it, it all really helps. So,
and if you're on YouTube, subscribe.
Yeah, like and subscribe. So listen, folks, thanks so much. Really appreciate you dropping in. I hope you have a fantastic Wednesday. Hopefully this help provide some context on something. And it's a topic that I know a lot about. And so if you want to find out a little bit more, just reach out to us and let us know. There's information down below in the description. So thanks so much. That's all I got. You want to close us out, Bill?
Listen, guys, we appreciate you being here. And if there's, like I said, we also do a little bit of consulting. So if you have some issues that are specific to you, we'd be more than happy to spend a little time visiting with you about it. And we would love to spend that time and help you solve a problem.
Yep. And by the way, down below, we do have a link to a new venture with our partners, Reese Energy Consulting, Reese Energy Training, and it is the basics of natural gas. If you want to understand the natural gas basics, you can go to the link down below, and this will take you from zero to a hero to really understanding what type of things are happening in the physical market space inside of natural gas. It's not designed for futures trading. It's not designed for trading at all. It's designed to understand the natural gas industry, because it has a lot of complexity. And if you want to learn a little bit about it, it is only $199, and there is a link down below.
So what we've taken is the Steve Reese Legacy course, and we've worked with him to get it online to where you can get it at a much cheaper price, and you can control your own timing on it. So this is a chance to actually get decades worth of information in a short period of time and delivered straight to your computer.
Yep. So listen, thanks so much. Really appreciate you stopping in, and we will plan on seeing you soon. And if you need anything, you let us know. Let's see, we did have a thanks. I don't know who this is. LinkedIn, thank you. Thanks for stopping in. It says LinkedIn user. Usually it tells us who it is, but I don't know if they've changed something. But thank you, LinkedIn user. So whoever just typed thanks, thank you.
Yeah. Mr. User, whose first name is LinkedIn.
So listen, thanks so much, folks, and we will be seeing you soon.